If you're looking for a podcast that packs in sound property advice, as well as offering you an insight into making the world of property effective and ultimately work for you, you're in the right place. Hosted by Arsh, the original property rebel. He's written an Amazon bestseller, created the Property Investor app, the UK's first, and is an experienced property mentor. More importantly, he talks the talk and walks the walk.
Hi everyone, and welcome to another episode of The Property Rebel with your host Arsh. And today we're going to be looking at the best ways to maximise the income potential from your property portfolio. And if I was going to put it in another way, how to stress test your portfolio. Before we go into that, I want to say a quick hello and thank you to all the new subscribers to The Property Rebel. Hopefully you're enjoying the podcast, hopefully you're enjoying the episodes and its straight talking approach. Just bear in mind that this is all a one-take session, so you will hear some ifs, ums and ahs, and potentially even some long pauses. But believe it or not, that's actually okay. So let's get moving on. So, how many of you, by a show of hands, and I'd like you to do this if possible, put your hand up, is how many of you have actually stress tested your portfolio over the last year? And when we talk about stress testing, we're talking about how many of you have actually sat down and gone through all the figures of your portfolio and compared them against last year. Now, believe it or not, it seems like it's quite a logical thing to do, but not many people will actually go off and do it. I tend to do this religiously. I have a look at how much we generated last year against how much we generated this year. I also break it down month by month to see how did we perform in April 2019 against April 2020. You know, it was especially important for me in lockdown to see how many tenants were kind of crying wolf and wanted the rent holiday. And I wanted to see out of our portfolio, what was the portfolio performing in 2019 when the market was good against 2020 when we're pretty much mid-COVID-19 and people were crying poverty. And believe it or not, we were actually on par with 2019, which is a really good sign. Now, I'm going to give you some hints and tips as to what to do to stress test your portfolio. I'm going to break this down, and I appreciate I might jump around a bit, but I want you to stick with me. I want you to get a pen and pad, and I want you to write down all these tips because these are going to save you thousands of pounds a year. So first of all, let's have a look at what's happened over the last few years. So first of all, Section 24. Section 24 is where the interest relief rate, the mortgage interest relief rate can no longer be claimed as an expense on your accounts. So therefore, previously, you may have been able to claim some interest relief. Now, unfortunately, you can't, which means that it's going to mean that you're earning more, which means that it's going to push you into a higher tax bracket, which means that you're going to end up paying more tax. That's the bottom line of it. Now, have you looked to see how you can use other capital allowances to counteract that? Have you spoken to not only your accountant, but a property tax specialist? An accountant will look at one thing and they may not know all the allowances. So I normally have an accountant and I have a property tax specialist who goes through and says, Arsh, you haven't capitalised on this allowance, you haven't capitalised on this allowance. We then go back to the accountant and say, we've got to account for this, this and this, and therefore we can reduce our tax level. So that's tip number one. Tip number two is that over the last few years, the government says that letting agents and landlords can no longer charge admin fees to tenants, incoming tenants. So naturally, letting agents have been increasing their costs and passing it back onto the landlord. Now, have you looked at this and what have you done with your rents? Have you increased your rent as a result of this? Have you looked at what you were being charged last year against what you were being charged this year? Have you looked at what rent you were charging last year against what rent you are generating this year? If the rent has remained the same, but your costs have gone up, that means that naturally you're generating or you're making less cash flow this year than you were last year. You should have been doing something about this. You should have been looking to see, well, what has the rest of the market done? Now, I know that I own a letting agent, so naturally we had to have that conversation with landlords and say, guys, okay, we're not making as much money because we can't charge admin fees. Therefore, we're going to have to pass it on to you guys as the landlord. Now, what we've said is that in counteract to that, we believe we can also kind of counteract that cost by also increasing your tenant's rent, because that is what the market is doing. And that went down really well with our landlords. Did your letting agent do the same for you? If not, why not? So that's my first thing that I'd be asking. Second thing I should be asking you is that if you're running a HMO, have you looked at your occupancy levels from last year to this year? Were you 100% occupied last year? Are you 90% occupied this year? If so, why is that? Is it because there's an increase in competition? Is it because there's issues within the marketplace? Is it because your property is looking a little bit tired? So these are all the things that you've got to address. Other thing, I'll come back to, actually, no, I'll tell you what, I'll mention this now. So in one of my HMOs, I've taken on a new rent-to-rent HMO, and I took it on from January 2020, and I've turned this into quite a high-level boutique-style HMO. What that means is it's probably one of the best HMOs in Wolverhampton, and I don't mind saying that. And the reason why I've done that is because we've done it up to an extremely high specification. My wife, who is an interior designer, has actually done it so that when someone looks at it, it's got that wow factor. I spent a little bit more on the refurb, admittedly, but it has paid dividends, because in a mid-range HMO that I've got, we charge approximately $300 to $325 per month per room. In this boutique style HMO, we're now achieving circa £450 to £500 a month in rental income. And believe it or not, the refurb cost wasn't actually that expensive. We've spent approximately another £1,000, maybe £2,000 per room in getting the decoration right, getting the orientation and the feng shui of the room right. But when I know that every time a tenant walks in there, or potential tenant walks in there, they go, whoa, okay, this is really cool, and I can see myself living here. And as a result, that's what we're doing now with our portfolio. Every time a tenant now leaves, we're looking, how can we now maximize the income on that room? Yes, we may have a void for a month whilst we're doing that room out, but we will still keep marketing it by using the stock images from my previous property, because it's going to be pretty much carbon copy anyway. The only thing that might change is slightly location, but we'll change that in the description. And as a result, we'll keep marketing it. So when someone comes around, they say, okay, here's the property. So hopefully by the time that the room is finished and refurbed and pretty much staged, we've got someone ready to move into it. So that's tip number 2, having a look at your stock to see, is it looking a bit tired? Can you generate more income from it by simply just giving it a modernisation refurb, shall we say? So we're not talking structural stuff. We're not saying throwing en suites and all that kind of stuff. We're literally giving it a redress and making it look and give it that wow factor. Now, other things that you should be looking to take into consideration. So we've looked at letting costs. We've looked at potentially increasing the rental income. Now, it's not all about HMOs. If you've got single lets, have you maximised on the income there? When was the last time that you increased the rent? So I know lots of landlords and lots of investors that when they've got a single let and they've got a tenant that's been settled there for a few years, they don't want to rock the apple cart. And they're thinking, well, they're paying £500 a month. They're quite happy. Let's leave them there. Have you tried increasing the rent and having that conversation with your tenants to say, guys, okay, our costs have increased, so therefore we're going to have to possibly put up the rent from $500 to $550 a month. We do this annually, and we look to see what rents we can increase, what rents we keep the same. And believe it or not, remember, by doing this, you're just increasing your bottom line. You're making your cash flow, because all your static costs remain the same. Your insurance remains the same. Your mortgage cost pretty much remains the same, and you go from there. Which then takes me on to the next point. When was the last time that you actually revisited your interest rates and had a look at the mortgage product? Are you were you on a fixed rate? Have you now gone onto a variable rate? Have you checked to see how much that was? Have you checked to see how much your new mortgage payment is? Lots of people miss this information. And I know it sounds logical, but lots of people miss it because they just fall into the rat race of, oh, it's okay, it's tenanted, it's making £500 a month, and the mortgage is around £200 a month, the management is around £60 a month. Yeah, I'm making around £240 a month. When they actually look at the mortgage and think, well, in actual fact, the mortgage has now gone up to £300 a month, the management's nearly at £100 a month, I'm not making as much as I thought. So these are things that you've got to look at. If you've got a single let, when was the last time you looked at the configuration of that single let? Could that single let now become potentially a HMO? When was the last time that you thought, well, in actual fact, I've got a 3-bedroom, 2-reception room house. Could I turn this into a mini-mo, a 4-bed HMO? Or could I turn this into like a potential couple of flats? One thing that I tend to do, if I've got a 2-bedroom mid-terrace property and where the 2 bedrooms are upstairs and the bathroom's upstairs along the corridor, you know the style. One thing that I tend to do is push the bathroom downstairs next to the kitchen by potentially putting a small extension on. And I turn that bathroom, which was upstairs, into a 3rd bedroom. By doing so, I've increased the value of the property because it's now a 3-bed terrace, not a 2-bed terrace. As well as that, I've also increased the letting potential of the property from a 2-bed to a 3-bed, which means that instead of me now charging £500 a month, I can now charge £600 a month. So these are the things that I'm looking to do when I stress test my portfolio. I'm looking at every way that I can maximise the property. I'm looking at every way that I can maximise the income potential from the property too. Now, going back to saving costs, there's lots of ways that you save costs. If you're running a HMO, when was the last time that you looked at the utility providers and the broadband providers? Broadband, there are lots of providers out there. Have you done almost like a testing analysis? Generally, we kind of use Virgin because of strength of signal and quality. We don't really have any drops in quality with them. As well as that, and in terms of utilities, we generally tend to go with British Gas because we find that they're cheaper than the likes of Empower, Scottish Power, etc., etc. Other energy providers are available, by the way. So we always look to see what we're doing. Now, when we come back to our HMOs, when was the last time that you stress test or had a look at your outgoings on your HMOs? What were your outgoings in April 2019? What are your outgoings in April 2020? Why is there an increase? Is there been an increase because it's been colder months? Is there been an increase because of COVID, we've had more people stopping the property, therefore more usage? You've got to try and analyse because obviously your mortgage payment will remain static. Your council tax payment will remain static. Your broadband will remain static. The only thing that will kind of fluctuate in a HMO is your council tax, your water rates and your electricity because this is all based on consumption. Have you decided to put in an annual consumption policy into your tenancy agreements? These are the questions that you need to be asking yourself. So with me, I'm a slightly different breed of HMO owner. I pass on all my utility costs back onto the tenant. Now, I've stripped out all gas and it's only electric and they pay their electric on their pay-as-you-go meters. Now, I'm not saying that you do that because that is quite costly and you've got to reconfigure your HMO. But if you have got all-inclusive council tax, electricity, gas and water rates, you need to make sure that you're on top of how much this is costing you. Because if in 1 month it's costing you £200 a month, and then the next month it's costing you £400 a month, you're actually worse off on your cash flow by £200. Does this mean that you now need to put a usage policy into your agreements so that if it goes over a certain level that you can claim it back on the tenants? Now, I'm not saying that that's enforceable or in any way, shape or form, but it certainly trains the mind of the tenant when they're living there. They think, well, hang on, if we go over a certain amount, we're going to have to pay for this. So something definitely to take into consideration. So as you can appreciate, lots of golden nuggets here. Next thing, when it comes to properties, when was the last time you looked at your insurance policies? So lots of you will be probably with like the likes of Admiral, Ensley and all those kinds of people. And every year you think, yeah, my insurance was £300 last year. This year it's going to be around £300 this year. Yeah, don't worry about it. Tick it off, tick, and we'll just sign off for it for another year. And this comes down to laziness. I'll be completely honest. If you're doing that, you're very lazy. And I don't mean to offend you, but you are lazy. But what I tend to do, because I've got a block policy, I've got all my properties on one block policy, I tend to shop around every year, and I notice that I save around £2,000 every year on my policy. So if I've had no claims in that last year, why should I be paying the same as I did last year? I should be getting a discount for loyalty to the insurance company, and more importantly, as a result of being a good landlord and not having any claims. The same with car insurance. If I've not had an accident, why should I pay? If I've not had any accidents, if I've not had any points, why should I pay the same as last year? I've been extremely well. I've been a cautious driver and I've kept within the speed limits and the legal road requirements. Why should I pay the same as I paid last year? Surely there's got to be a discount for good behaviour. And I treat my buildings insurance exactly the same. I shop around. I create a list of 4 or 5 different brokers, and I said, guys, here's my portfolio, here's the tenant type, here's the kind of income, here's the kind of coverage that I want. Now go off and find me the best deal. And they have to come back to me and say, okay, Arsh, we've got you this deal. It starts, and I always do it approximately 2 months before the renewal, because there will be times that lots of people come back and ask questions. Can you tell us if this happened? Can you tell us if that happened? And what we tend to do is we save anywhere between £1,500 to £2,000 a year, and that's a big saving. You can do the same with your utilities, and the other thing that I would say is that in the same breath, you do that with your banking as well. Now, your mortgages will be set with your mortgage companies. If you're on a fixed rate, obviously you can't go anywhere. If you're on a variable rate, have you looked to see if there's better products out there for you that suits your requirements? So could you change from a variable back to a fixed without getting hit with a load of penalties? A lot of lenders allow you to do this. So give an example, the mortgage works. I was on a variable, they allowed me to go onto a fixed and they didn't charge me any other costs. I now fixed for another 5 years on a lower rate, which meant that my payments were lower. I also look at this from the banking world as well. My banking predominantly is with Lloyds Commercial. That's for all my mortgage payments to go in and out, because that's where predominantly a lot of my mortgages are with. However, for my day-to-day cash going in and cash going out, I tend to use other banks. So places like Starling, Tide, Metro, we've got Monzo. These are pretty much all online services. So they haven't got the overheads that someone like Lloyds, RBS and HSB have. So therefore they can offer you a much lower service charge and still maintain a high customer service level. So you could save a lot of money on the day-to-day banking costs as well. I appreciate this takes time to set up and it can seem like time consuming, but if you look at how much money you save, this is not penny pinching, this is being money wise. And I'll be completely honest, is that if you can't be bothered filling out forms and stuff, this may not be for you. But for me, I find that we're always on the ball, and as a result of that, we keep moving forward, and it works for us extremely well. So that's where we are in terms of that. So you've just got to look at your portfolio, stress test it, see where it is. What can you save on without compromising quality? Have a look at how you can increase that income. Have a look at your providers, your service providers, the builders, the utilities, the insurance, etc. Everything that I've mentioned in this podcast. And by stress testing it, I guarantee that you will save money, and this will increase your bottom line, which means that you're making more money from your portfolio with very little effort. So there you have it, guys. Hopefully you've enjoyed that session. Lots of golden nuggets in there. I'd love your feedback on that. So feel free, if you've loved this session, please leave me a review on the App Store. The more reviews I get, the bigger the reach we go out to. And it really is as simple as that. If you've enjoyed the session and you want to know more about who I am and what I do, I've got a very active YouTube channel. So all you got to do is go to YouTube, type in Arsh. I've got hundreds of videos there. I release a new video every Thursday. Finally, I release a new podcast every Tuesday, which I'm sure I mentioned earlier. However, if you're looking for your next property investment deal, have you downloaded the Property Investor app? I've created the UK's first property investment marketplace in the form of an app. It's called Property Investor. You can go to www.propertyinvestorapp.co.uk, or you can simply download the app from the App Store from typing in Property Investor. On the app, we have all kinds of deals, which are below market value deals, rent-to-rent deals, lease option deals, commercial deals, just to name a few. And some of the discounts vary, going up to 40 to 50%. If you like the thought of that, go to the App Store, type in Property Investor, download it. It takes 2 minutes to register, and you've got access to all those deals in the palm of your hand. On that note, guys, as always, I wish you all to be safe and well, and I'll speak to you all on the next episode. Take care. Bye-bye.
The large majority of people make a positive change if they take immediate action. So act now. Download the Property Investor app and join Arsh on his social media channels to excel your property journey.